Apple had a $1 billion dark pool print only 2 days ago, which if that was a buy, that means this person is up already $40 million in only 2 days off of shares. So that's pretty insane just to begin with. And also, it's very interesting to see we had a very bullish daily candle on Apple here. And if you scroll out to this chart here, I've had this bottom support level of the channel and also top resistance for a very long time right now. And right now we are above the bottom of the support. This is a key support going forward. It acted as a key support and then also a resistance. As you can see over here, we touched it once and then twice before falling very low down to like the 120 or 129, 130 level. And this has acted as a resistance up here when we tried to get back above, and it will act as a support if we touch it in the future, which I do believe will happen. So it's gonna be interesting to see what happens up here. I'm not actively trading it at the moment, but if we are gonna see signs of weakness going forward, then it might take a position to short it down to like 157, 158, where it will most likely, very, very high probability at least, bounce off this level, at least in the short term. Could it continue down later? Yes. But I do want to discuss some things because of Apple's strength so far and how it relates to SPY and where we may be able to go going forward from here. So we officially hit my target of 4,160 today. This is the one I gave you guys like earlier in July. So really happy that we were able to get up to this level. This was a clean breakout of this consolidation we had for the past couple of days. So this was also very key for the bulls going forward. You could see here with this trend line and also the supply zone. The trend line is the white one here, and then the supply zone is in the purple. We were able to cross over both of these on the 15-minute chart, which is what I'm on right now. This was very key. So once this happened earlier, I posted on Twitter once we broke above on this in the 15-minute candle. This was a decisive break, and as long as we held on the 50-minute candles after it, that would be key for us to continue upward above the supply zone, which is exactly what happened. We consolidated here for about an hour. You can see 4 50-minute candles, and then boom, this big candle was our key for a continuation upwards, and then it continued not super, super high or anything because, again, we were up over 1.5% on the day, or at least where we closed. So this was a very clean breakout. And now looking forward, at least for bulls, we need to stay above this level right here. So this is roughly 4,135 on SPX. This is both a convergence of my supply zone, which you can draw out from previous resistance. This 4,135 to 4,145 level was very, very key in terms of the last few days. And that is kind of brought to you in part by, if we go to the hourly here, that kind of started from back all the way when we consolidated previously in the beginning of June. So you can see here we had heavy consolidation, and this was heavy distribution before that big sell-off where we had a bunch of gap downs going downwards, and we did see a lot of dark pool prints in between this level, which also acted as a further resistance once we did retest it around this range here. So a lot of things converging around this level right here. Also, if you use volume profile, you'll see that there's a thick volume profile around the 4,100 to 4,145 range. So this kind of brought us consolidation, partially why I got out of my long positions earlier. We did rally up after I got out of my long positions, which is fine, happy with my trade. But I did see this end up, I did assume this would end up happening just because of this consolidation phase back here. And I knew I could jump back into a trade once we did the breakout of this level, which is what I actually did today. Now, I am out again. I'm just trading and scalping intraday for right now. However, tomorrow I will be looking to see if we're able to hold this level here. Like I said, 4,135, very, very key. We want to stay above this level. If this is a breakout that turns into a fake out and we fall back in, especially on the hourly. So for example, we could trade around here and maybe it could fall back into this level like 4,120, 4,115. That would be very, very bearish. And if you remember from previous videos that I've kind of talked to you guys about, if you have a bullish setup like this right here, consolidation with a breakout, and it falls back in and is a fake out, that means that's even more bearish than if you were to have just a bearish pattern because the bullish pattern was not able to hold. So do I assume this is going to happen? I personally don't think this is going to happen. I think we actually have room upwards to 4,200. But one thing I do want to tell you guys in this video is we are getting near to where I believe will be a pivot point for further downside. So because of that, that means I'm not holding anything overnight for the upside right now. All of that has been exhausted. I was able to get in way earlier when I was talking about this trade all the way back in the 3,800s, and I entered between 3,800, 3,900, all the way back here. I got most of this move upwards, and I'm very happy with that. I'm not going to be greedy and try to continue holding up and getting FOMO, as some people may have after seeing such a big rally, because that's very dangerous. And could we continue up? Yeah. Again, like I said, I'm assuming we'll probably continue up, but I'm out of swings for right now until I'm ready to get my swing short, which again, I could happen next week, could happen the week after. I don't know when the time frame is as of now. I am assuming it's going to happen within this month that I do enter a swing short position. However, as of now, I'm just going to be day trading or just sitting on my hands because I don't want to give back the gains that I had from earlier over here. And that's a key lesson, key psychological lesson for you guys today. So tomorrow, if you were to retest around this level, maybe try and take a long. If we had confirmation under and it shows that it was a fake out, that we actually did the upside, then I'd get out of that for a quick loss instead of holding and just hoping. Again, hoping is never a good thing in the market, that we would continue up. So right now, just focusing on my basic risk reward levels intraday, and I suggest most of you guys probably do the same. And if you're not as well versed in terms of day trading, then just sit on your hands for right now because it's gonna be pretty hard. Either we continue to melt up here, 4,200, like I said, key resistance level, convergence with my yellow line that's on the daily chart, and also this upward line that we started from back here, which is a pretty hefty incline. You can see here the angle of it is pretty hefty, so this one is going to increase at a very strong rate going forward. So the further that we consolidate here, if we were to continue up later on, this is going to act as a resistance much higher. So this is a key supply zone between this 4,160 to 4,220 range, and that's partially from what you can see here on the daily chart back when this acted as a demand zone. So you can see here the top 4,220 was this big wick that occurred all the way back on January 21st, 2022 of this year. And this was a major bottom reversal that the market had all the way back then. So this is the top of it. And then the bottom of it was back during this double bottom that we had here before the mega kind of rally that we had all the way in March. So that's kind of how I got it. And I have seen some of your comments kind of like talking about asking me how do I get some of these supply and demand zones. So there's me explaining it to you guys. Hopefully that helps. And there is a little bit more into that as well, like where to place them, which ones are more key, at least going forward, because there are a lot of supply and demand zones. Partially that's from experience, but hopefully I can give you guys insight in these videos going forward of how I kind of think behind it, and you can kind of replicate it and maybe incorporate it in your own trading strategies. But that's where I got this supply zone from. And also I have an algorithm on the side that is providing me with a lot of resistance levels over here. Here's a sneak peek kind of it. I've been using this now for, I don't know, the past 8 months, 9 months since I developed it. And this one does have a lot of resistances around SPY. I think it was like 416, 417, 418. Again, does that mean we can't go over? No, but that means there's going to be a lot more sellers around that range, which can help in terms of weakness going forward for the market. So one thing, this is where that yellow line was, by the way. I got that from the top pivot all the way back end of December. If you go across here where there's other pivot points like this mega or major downward start, like a downward channel that we started over here, if you drag it across, this will act as a key resistance, and this is smack in the middle of like 4,200. So we do have some resistances coming up. Again, we could pass them going forward. And also, I believe this kind of rally that we're having right now will go much farther than I even expect. However, I believe it will end, as I've shared in the long-term video, in a short setup that will pay out very well if we're able to catch it. But the goal of this rally basically is just to get all of these shorts out of here, kind of squeeze them out, kind of like we saw all the way back in March, get them all out of it, even go higher than most people would have thought, even went above this yellow line that you could see here and had a really bullish daily candle, and then start the downward trend downward, which brings me to another point. I want to see what happens in the dark pools when you can see here on Cheddar Flow, the fourth tab down. I want to see what happens in the dark pools as we continue up. I've talked about this in previous videos, but we saw 1.5 billion worth of signature prints today. That's a decent amount, but that's nothing insane. For example, on SPY, if we go to the SPY chart here, back around this day, I don't remember exactly what day. No, it was back around here, beginning of April, I remember. I don't remember what day it was. It was one of these daily candles. We had a $9.4 billion dark pool print for the signature print, which is very, very unusual. Look what happened after that. We fell from all the way up around 456 all the way down to 385 in the course of literally like a month and a half after that. I want to start seeing those kinds of prints before I start to really go heavy short. That's going to be the tell-all to kind of give you a sense on when we may start to pull back. When is there an exhaustion of buyers going up? When are these shorts getting completely squeezed out and can't do anything anymore? And big money is thinking, okay, we're starting to get in on this downside. And again, that could take a while till we get there. I have levels that I am going to potentially short at. I'm not going to share them in this video. I will on Twitter when I decide to short. But like I said, this could go way higher than I even expect. And I'm looking at all the data, whether it be in the put flow, the dark pools, also all of my technical analysis and etc., everything else I have on the side. And I'm looking at all of this and accumulating my own thesis based on all this data, kind of getting a sense on what we could see later. But like I said, be careful for right now. In the upside, I do believe there could be some more upside to come on the market. And also you could see like Apple here, like I shared with you earlier. This one does look very bullish right now, but keep in mind that this isn't something that's going to go on forever, in my opinion. You can have your own opinion, but look at the data. Don't just become overly bullish or marry a position overly bearish because you think that's what's supposed to happen. Continue to look at the data and just trade carefully, have good risk reward levels, and ideally you'll be profitable. But I do appreciate you guys watching this video today, and I'll see you guys in the weekly recap on Sunday.